Forget about it if we trade 4,000 different underlyings. But if you look at just the S&P 500, you have a $2,000 underlying that trades 900,000 contracts a day, and the multiplier on the contracts is another 100. So, the notional value of trade is staggering. But I think the more interesting question is your first one. And it is, as a public company, the tension between managing to quarterly earnings. So I have to announce every quarter how we've done the previous quarter as far as making money. And that's, we give a number, earnings per share, and I announce Friday how we did fourth quarter. So it's an earnings call in the morning, and we all get in, we're nervous, we're sweating. It's like a final every quarter. We sit down, turn the phones on, read some prepared remarks, and go right into Q&A. Why did you or did you not do the following? For my investors, they'll ask questions. Analysts will ask questions. So the tension between a forward-looking, innovative business is managing that tension between quarterly earnings and growing for that 3 to 5 year business plan, executing and keeping strategy in mind, because that usually involves cost up front that you hope to recoup at your multiple in years to come. So it's a challenge, but the balance, I think, is the key. Balance in anything, not just that. That is a balance that you all face. It is just finding life's balance. This is finding the business balance. It's the exact same thing. Andy, anything? Nothing yet?
I'll talk to you.
Still formulating?
Yeah.
So this is just, I worked in '79 on the old Ford.
Which one?
Ford
Trade?
Yeah. Shearson and Low Roads and Hornbook.
Okay.
And it's such a confusing concept for me now that there's this idea of market operators being companies and selling on the stock exchange. And it's hard for me I just always thought it was just a platform and a place to meet for traders.
Right.
And now to think that they are companies that are being traded is just a very abstract and hard for me to get my mind around.
It's just like anything else. The scale, and now that the volume, like when you and I started in 87.
So I 79.
So if you think even from when you were trading to when I was trading, the volume exploded, and it has quadrupled since then.
Mm-hmm.
So with all of that trade, the ability for a company to come in and provide scale has made it much more efficient. And now with, of course, computers, we're able to trade many more things. I tried to trade 6 separate underlyings and keep that all going in my head.
So it's just picking up all these crumbs.
It's funny. I tried to make quarters, and computers try to make half pennies.
Mm-hmm.
And that's the difference. But they can look at 4,000 different underlyings. I could maybe follow 5 or 6. Best guys maybe 7 to 10. The computer, it's unlimited.
But it was this was an idea that,
Right.
gosh, what is that, 35 years ago now?
Right.
Because no one really kind of thought
No.
that through.
Yeah. And they were clubs, right?
Yes. Yeah.
And we all evolve or find something else. I found something else.
There's
Instead of
something
you.
else.
Right.
Yeah.
Questions? Let's go. I'm going to start asking. Yeah. What's your name?
I'm Bill.
Hi, Bill.
Hi. Since the online trading and the trade companies are newer industry, do you plan on, since you're a bigger public company, buying out smaller?
Good question. So the question of consolidation is one we're asked all the time, and I won't limit it then, the answer, to just online brokerage. We as an exchange cannot own a broker. There's a separation between brokerage, and I'm a self-regulatory organization on the other side. So I can't own a broker, but the question of consolidation is one that makes sense. There are 12 options exchanges in the US. We are the largest, the first and the largest. The question is we're often asked, does it make sense for you to go out and buy the small ones? It's a question I hear all the time. My answer would be forward-looking if I gave it to you. What does that mean? I would go away in handcuffs. I can't provide a forward-looking statement. So, but in general, consolidation makes sense when you take two companies and the synergies that is putting those companies together, the synergies and the 1 + 1 will be greater than each individual company. We assess that and must ask ourselves that question each and every day. So in order for me to make sense to buy the smallest exchange, would I pick up the orders that he's trading that I'm not after we merge? First question. Answer is probably not all of them. Can I take the expense that he's incurring by running his or her exchange, throw it onto mine, and save the expense? That's the second question. That's the synergy question. When those two boxes are a big yes, then it makes sense. Then it makes sense. Today, CBOE has not engaged in that consolidation. It has not made sense for us. Great question.